Tokyo, late 1980s. Neon lights glow endlessly. Trains run on time. Office towers stretch higher every year. Japan looks unstoppable. Its economy is growing so fast that people start saying something unthinkable. Japan isn't just catching up to the West. It's about to replace it. Japanese companies buy Rockefeller Center. Sony buys Columbia Pictures. Business books warn that Japan Incorporated has cracked the secret to permanent growth. At the center of it all is a simple belief. Land prices only go up. In Tokyo, the land beneath the Imperial Palace is said to be worth more than all the real estate in California. Not metaphorically, literally. It sounds absurd, but in Japan's bubble economy, absurdity feels like intelligence. And no one wants to be the person who doubts a miracle. The bubble that felt rational. Japan's rise didn't come from nowhere. After World War II, the country rebuilt itself with precision and urgency. Not just faster than expected, but faster than seemed possible. Factories, exports, discipline. By the 1970s and 80s, Japan had master manufacturing. Cars, electronics, semiconductors. The government worked closely with banks and corporations. Stability felt guaranteed. Then came cheap money. To counter a strong yen and protect exporters, interest rates were kept very low. Money became abundant, almost frictionless, and that money needed somewhere to go. It flowed into stocks and real estate. Large corporations owned shares in each other. Banks lent not against cash flow, but against rising land values. Assets justified loans. Loans bought more assets. Value stopped matching. Momentum did. By 1989, Japan's stock market was worth more than all others combined. This wasn't speculation anymore. It was consensus. When price replaces purpose, here's where the system quietly broke. Companies stopped asking, does this investment produce value? They started asking, will the price go up? Land wasn't bought to build. It was bought to hold. Stocks weren't evaluated on profits. They were evaluated on momentum. Banks didn't assess risk. They assumed appreciation. And the government, seeing rising tax revenues and global admiration, didn't intervene. Why interrupt success? Japan wasn't overheating. It was winning, until it wasn't. The pin. In 1989, the Bank of Japan grew nervous. Asset prices were accelerating faster than the real economy. Debt was piling up. Speculation was everywhere. So the central bank raised interest rates. Not as a shock, not as a warning shot, but as a reminder, quiet, technical, almost polite, that money still had a cost. That was enough. Stock prices stalled, then slipped, then fell. Land prices followed, slowly at first, then persistently. The belief that land only goes up cracked. And once belief breaks, leverage doesn't unwind gently. It turns gravity on. The collapse without a crash. Japan's bubble didn't explode. It leaked. Stocks lost more than half their value. Land prices declined for years, then decades. But here's the strange part. The economy didn't collapse overnight. Unemployment stayed relatively low. Banks stayed open. Life looked normal. That normality was the problem, because beneath the surface, balance sheets were broken, and everyone knew it. Zombie banks, zombie companies. Banks were holding mountains of bad loans. Admitting those losses would mean insolvency. So instead, they pretended. Loans were rolled over. Maturities extended. Losses ignored. Companies that should have failed were kept alive. They weren't innovative. They weren't productive. But they weren't dead either. Economists later called them zombie companies. They consumed credit. They occupied workers. They absorbed capital. An economy built to move forward was now paying full salary to its past. Creative destruction, the engine of capitalism, wasn't damaged. It was switched off. The balance sheet recession. This wasn't a normal downturn. Interest rates were cut to zero, but companies still refused to borrow. Not because money was expensive, but because risk itself felt dangerous. After the bubble burst, the priority wasn't growth. It was survival. Debt repayment replaced expansion. Saving replaced investing. Even at zero interest rates. This is what economists call a balance sheet recession. When everyone tries to fix their own balance sheet at the same time, the economy loses its engine. Deflation, the silent enemy. As growth stalled, prices began to fall. Not fast, not chaotically, quietly. Deflation sounds harmless, but it rewires behavior. It turns time into an enemy. Waiting becomes rational. Movement feels risky. Why buy today if it's cheaper tomorrow? Why invest if returns keep shrinking? Why raise wages if prices keep falling? Debt grows heavier in real terms. Risk starts to feel irresponsible. Deflation doesn't crash economies. It convinces them to stand still. A generation without momentum. Years passed, then decades. Young people entered a workforce with low wages and limited mobility. Careers didn't collapse, they flattened. Effort still mattered. Talent still existed. But the rewards for boldness disappeared. When risk stops paying, caution becomes culture. Japan didn't implode. It aged. Why Japan didn't just recover? People often ask, why didn't Japan bounce back? Because recovery requires destruction. Bad debt must die. Unproductive firms must fail. Losses must be acknowledged. Japan chose stability over shock. It avoided chaos. It preserved social order. But the cost was dynamism. The lesson. Japan's lost decades aren't a story about failure. They're a story about delay. Delaying loss recognition. Delaying reform. Delaying pain. Because sometimes the most dangerous decision isn't doing the wrong thing. It's refusing to admit what already happened. And that pattern isn't Japanese. It's human. We build systems on beliefs. We defend them when they crack. And when reality disagrees, we often choose comfort over correction. Japan didn't collapse. It stalled. And when growth disappears quietly, it can take a generation to notice what was lost. If you want to keep exploring the stories of cities, economies, and power, like and subscribe. The next story is already waiting.